Right. Oh, perfect. Right. I think we're ready to make a start. And so, good morning, everybody. It's a pleasure to be here. My name is Antoine Diemer, and I'm with AITA. AITA is a global non-profit business group that champions the use of high-integrity carbon markets to achieve our global collective net zero goals. And more specifically, I'm focusing on a program called ICRA, which is promoting best practice in the voluntary carbon market through an accreditation. AITA is also very interested in the South African context simply because we have a partnership with the local NGO, nonprofit South North, to run a forum on all things carbon markets that includes sellers, buyers, market participants, and policymakers. And it convenes twice a year to discuss issues such as supporting the carbon tax regulations, supporting the delivery of South Africa's NDC through Article 6 of the Paris Agreement, but also the issue around scaling local supply of eligible carbon credits for use under the carbon tax. So now, very few countries have implemented comparable tax and offset regulations. So that's really innovative. There's a couple of other examples in Latin America with Colombia, and then Chile going live early next year. There's also an example in Southeast Asia with Singapore, but South Africa has really been a pioneer with this regulation. And today, we're going to have a discussion on how the South African carbon offset market has been recently revived under the carbon tax regulations. So we definitely welcome the role the markets can play, and the fact that the National Treasury has provided a forward view on the tax rates over the next few years, because it really helps provide visibility for all stakeholders involved. So right now, under the carbon tax, a company can surrender offsets for between 5 and 10% of its emissions in lieu of paying the tax, and the current demand that it creates is about 4.5 million eligible credits annually. So really we have seen the start of a success story, but we've also seen that it comes with challenges, and we're still not meeting the full potential of this regulation and what it can achieve. So this evolution is also taking place in a global context of a lot of scrutiny. There's a lot of attention on markets at the moment from media and from regulators, both looking at the quality of the supply, but also the integrity of the demand. So a lot of challenges to address. And we will need those high quality markets. They're a key mechanism to achieving our net zero climate goals. So we'll see that in this session there are important initiatives out there that are trying to address the current supply and demand issues. So we hope that by exploring the challenges and the successes, we'll start to understand how the South African market can unlock further to realize its full potential. And for this conversation, I'm really glad to say we have a fantastic panel today, both in person and online, appearing now on the screen, which is great. So I'd like to introduce first, to my left, Dr. Storm Potts, who's Head of Global Climate Change and Policy at Sasol, who leads the development and execution of Sasol's offset strategy. To her left is Rodrigo Becerra, who's Head of Upstream Project Development at Hartree Partners, where he leads all global carbon project origination and development activities for Vertree, an organization that is accredited by ICRA. And joining us online, we have a colleague of Rodrigo, Miriam Majeras, who's Head of Environmental Strategy and Advisory at Hartree Partners, where her team helps clients and investors navigate and scale participation in environmental markets. Next to her is our final speaker, Robbie Lowe, founder and director of Prometheum Carbon and an advisory firm in South Africa that has worked with the private and the public sector for over 15 years on climate-related projects, and who has developed a potential candidate local standard called the Inclusive Carbon Standard, launched earlier this year in June, which is really quite promising for use under the carbon tax regulation, and we'll talk more about it shortly. I'm going to turn to you, Storm, for a first question. What contribution do you think the carbon offset allowance has made to growing the offset market in South Africa?
Great, thank you. Thanks very much, Antoine, and welcome everyone. So I think before I answer your question directly, I'd like to just take a step back and explain how Sasol views carbon offsets within our full reduction or mitigation portfolio. So we have a scope 1 and 2 target of 30% reduction by 2030 and a net zero ambition by 2050. And so for this target, for the 2030 target, we are really looking at direct on-site reductions to achieve this target. So a very limited role for carbon offsets in this short to medium term. But we certainly see a role for offsets, specifically removal offsets, as we move towards our net zero ambition by 2050. So from this, you can see that our demand from a voluntary perspective is relatively speaking quite far into the future. So what the allowance under the carbon tax did is that it created demand today, well in excess of anything that we could have experienced through just organic growth of a voluntary market. So this has provided some market certainty in terms of volume requirements. It has also provided a clear price signal because, you know, what I mean by this is that the carbon offsets need to be below the carbon tax in order for it to be, for us to make sense to purchase to achieve that carbon tax liability reduction. So a little bit of stats. So since 2019, the inception of the carbon tax, Sasol has sourced and retired over 11 million credits against our tax liability. 11 million, that is a lot. And this has really created this wonderful win-win situation because we see the proceeds of the sale of the credits are going to support the continuation of projects. They're realizing benefits for the communities in which the projects are based. And the other part of the win-win is that it has helped to reduce our carbon tax liability by over 600 million rand in this time frame. So in essence, now to get back to your question, it's been absolutely catalytic in growing this market. But as you mentioned, we certainly need to do more to help it realize its full potential. So currently we're sitting with a massive supply deficit. To put this in context, our offset requirements are around 4 million tons a year. Last year we were only able to achieve or to meet half of that. So that left, 2 million tons deficit of, and this is a huge opportunity. Sorry, I think my mic. This is a huge opportunity cost loss. So I think, with regulatory certainty into the future, we are going to be able to scale this market, not only to meet our domestic needs, but also then to supply surplus credits into the market, into trading globally.
Thanks very much. Yeah, this is on. Thanks very much for those remarks. Touching on the regulatory perspective now, I'd like to turn to you, Rodrigo, for a few remarks on this. So what is your, Hartree's current outlook on the Article 6 market, and how does it build upon, starting with legacy mechanisms like CDM, or local regulations in countries like South Africa, or the work of independent carbon crediting programs, which serve both voluntary and compliance markets?
Is this working? Yeah, it is. Well, thank you all for being here, and thanks Sasol for the invite. It's a real pleasure to be here talking to you. I'm not South African, so I wasn't that lucky, but I'm very, very, very glad to be part of this panel talking about the South African carbon markets. And before we jump into that, just something that the World Bank publishes every year is the state of carbon pricing internationally, and there are some very interesting numbers in that. First, that today 23%, as of 2023, 23% of global emissions are under some sort of pricing mechanism, which is good given 10 years ago that number was 7%. The not so good news is that out of those emissions, only 5% is taxed at a level that is in line with the trajectory that we should be by 2030. That should be between 50 and $100 per ton. So there is quite a bit of work to be done, considering that pricing carbon is the single most powerful tool that we have to drive emissions down. I mean, and we all feel that in our daily lives. If you price carbon, people will think about whether or not they'll leave the lights on. If you price carbon, people will think what choice of TV or household appliance they will make. So there is, when you price carbon, you provide the board of the companies and the high emitters incentive to implement technologies that will push carbon emissions down. Without carbon price, they don't have the legitimacy or the mandate to do that in many cases. So pricing carbon is the single most powerful tool that we have today, and we should all be promoting pricing, not only expanding the scope and going for 100% ideally at some point of emissions being taxed or being priced, but also in terms of the level that those taxation needs to be. That needs to be done, though, with cautious, because obviously you need to make sure that the vulnerable people on the other side are protected, and we all have seen what happens when you move those prices too quickly, too high, and in France and in Brazil, in many other jurisdictions, when price of fuel goes up, inevitably people go on the streets. It affects their pockets. So it needs to be planned. It needs to come with a long-term view of what the destination, and it needs to secure the political and the social support that you need so those prices can come in. And that's a little bit to what you're talking, Storm, about carbon offsetting, which provides almost like a pressure valve to regulate pricing and allow organizations to go outside the operational boundaries and find opportunities that are cheaper to reduce. The atmosphere doesn't care where those emissions are coming from. So long they are reduced, it is creating a positive climate, and you still put in a price. So flexible mechanisms, as we used to call it on the CDM, are quite key piece of any well-designed ETS or tax scheme. And I think we're going to talk a little bit more about offsetting, and we can deep dive to your point on quality and what we should expect. But not only you allow companies to generate emission reductions at a lower cost, you also end up benefiting communities, biodiversity, and delivering a number of other social and economic benefits that you have associated with that. So, I mean, as I said, as an outsider looking in, I think South Africa has a fantastic platform that it can build on in terms of pricing carbon internally that will fundamentally increase resilience as we move into a world where every carbon is taxed, and we may even talk a little bit about CBAM further on, because sometimes those prices will come from outside in. And already having the platform in place and the pipes working allow you to improve and expand. And I'll let the experts in the room talk a little bit about what improvements could be put in place in terms of where we are today with the tax scheme. Anyway, that's just my opening statements, but we can obviously.
Thanks very much, Rodrigo. So really powerful, but it needs to be done well, pretty much. Staying on the topic of Article 6, I'd like to bring you in, Robbie. So your company, Prometheum, has been active in developing governance systems such as, in South Africa, the Carbon Offsets Administration System, where corporates are able to retire offsets against the tax liability. And then more recently, you've been working on an Article 6 framework, and we understand that it's early days, but could you please share some general thoughts on what elements need to be considered in developing such a framework?
Yeah, thank you very much. And as a start, I just to say thank you for the opportunity to participate in this panel. I'm really honored. Thanks. The work we're doing on the Article 6 framework is under a contract with the NDC partnership, with the DFFE, the South African Department of Forestry, Fisheries and the Environment as the main client. So I can't share too much information, but I do think I can give you some of the highlights that's happening. I think the first one, just to link on to the previous comments, is the very strong request and underlying principle in the work we're doing to build on existing South African infrastructure. And in that, we've got two main areas that we build on. The first is building on the carbon pricing system, which consists not only of the Carbon Tax Act, but also the offset regulations and the infrastructure that lies behind it, the COAS, or Carbon Offset Administration System. But then also our National Greenhouse Gas Inventory system that collects the data. And the reason that's important is, at the end of the day, if we do internationally transferred mitigation outcomes, or ITMOs, in terms of Article 6.2, we've got to do the corresponding adjustments. So that's the starting point. The next thing that we are looking at in a fair amount of detail is what some of the early movers in this space have done. Countries like Zambia and Ghana has actually implemented Article 6 frameworks and have already started implementing Article 6 transactions. And we see a little bit of a disconnect between what they're doing and what we think is necessary for proving the integrity of the Article 6 system, starting with environmental integrity, but later building on with respect to social and economic integrity as well. As an example, in some of these emerging systems, it is not required to issue a carbon credit, to issue an emission reduction and mitigation outcome as a carbon credit before it's transferred. In some of these systems, it's simply required that you use a methodology from a recognized standard and that it's audited by an auditor. But there's no requirement that credits actually issued by a recognized standard. We think that we should not go that route. We think that the experience South Africa has got in approving projects for the carbon offset system under the CDM, historically VCS gold standard, and then the Carbon Tax Act says any other standard that the minister may approve. And the experience we've got there gives us sufficient confidence that we can build on that approach for Article 6.2 contracts, Article 6.2 transactions, to insist that a mitigation outcome, before it can become an ITMO or internationally transferred mitigation outcome, it must actually be issued as a carbon credit in line with the existing South African system. The second thing that is taking a lot of thought is the whole underlying principle of Article 6 is that Article 6 transactions should lead to increased ambition. So the question that we've got is, how do we prove increased ambition? And again, we've looked at quite a lot of the existing mechanisms out there, and we see that people take, for instance, a huge share of proceeds and contribute that to adaptation. We think that will actually reduce ambition because it will reduce the revenue of the carbon project. If you reduce the revenue, then you look at classic economic theory, you will reduce the supply. And so we think that there may be perverse incentives in that type of mechanism, and that it will actually lead to reduced emission. Something that we are thinking very hard about at the moment is to put in a reference price of carbon and to say that authorization for international transfer of mitigation outcomes can be granted if it is higher than a reference price. There are two options on the reference price. We are aware that some countries are looking at a reference price that's equal to the carbon price in the receiving country, in the buying country. We think there are certain risks involved in that because it disconnects from the local economy. And then if we go back to our existing infrastructure and we look at the very well established domestic carbon price in the form of the carbon tax rate, we think that it may be a good solution to use the South African carbon tax rate as a reference price. It's very early days. There's a lot of discussion about it. There's a lot of thought about it. There's a lot of theoretical analysis, and there's a lot of scenario testing in the space. But at the moment, it seems that if we were to implement a project where we take the South African legislated carbon tax rate in any specific year as a reference price, and we say that mitigation outcomes may be authorized for international transfer if the transfer price is higher than the reference price, then that would have a lot of benefits. The first is that it would increase ambition, because it will bring cash flow into the country to stimulate the green economy, to stimulate our national economic objectives. In that way, really contribute to both climate change mitigation and to our socioeconomic objectives. I think I should stop there. If there's any more questions, I'll be very happy to answer.
Thanks very much, Robbie. We'll reserve some time for Q&A at the end of this session, so I'm sure lots in it, lots of food for thought, and really good to see that actually the South African frameworks could really inspire others out there in the context of Article 6. I'd like to stay with you, just bringing us back to the local context in South Africa. So Storm mentioned at the beginning all the regulatory uncertainty that there is, but what other barriers do you see, and also opportunities? What are the opportunities that you see, especially in the context of your work on the inclusive carbon standard?
Yeah, thanks. I think I'd start with a link to what Storm has said, and that is about the volumes that has gone through the South African offset system. So I calculated it from a slightly different perspective, and in 2022, just less than 1% of South Africa's national inventory was actually retired on the COA system. If you, ignoring the fact at the moment that our NDC has got a peak plateau and decline, in other words, that we don't currently have a decarbonisation trajectory, but assuming that we would, for instance, have had a decarbonisation trajectory of, let's say, 4% per year, in that theoretical case, the carbon offset system in South Africa has contributed about 25% of what the national intention would be, and it's early days for the system, and the supply is very short. We've still got to wait for projects to come to the market. And I think that as far as mechanisms for decarbonisation goes, that's a very, very impressive achievement. To have a single mechanism that can contribute 25% of what the national ambition could possibly have been is, I think it's very valuable, and I think one needs to build on that. One of the biggest challenges in the system at the moment is the demand is very, very short. Storm has mentioned some numbers. We've also done some internal numbers. In our estimation this year, the potential demand could be about 6.5 million tons, and the potential supply is roughly probably about 2 million tons. One of the biggest barriers that's stopping credits coming to the market is the very high administrative burden and overhead in the existing standards. Those of you who have developed carbon projects in the past will know that it is time-consuming and expensive. So we started working in 2017 to ask ourselves, what could you do to reduce the life cycle cost of issuing carbon by at least a factor of 10, with the purpose specifically of making carbon finance accessible to smaller SMME, community-based rural projects. And at the time, we came up with a combination of a slight change in looking at the structuring of the methodologies of carbon standards and also using a technology platform. We've been building this since 2017. Before we started building, we went to National Treasury and we asked them, the Carbon Tax Act says that the minister may approve a new standard. If we build this, would the minister be able to consider it for approval? National Treasury and the DMRE then got World Bank funding to develop this draft framework for the approval of carbon standards. The draft was published a while ago. There's been some to and froing between the DTIC and the DMRE with respect to it, but as far as we know, it's back at the DMRE, and we're very confident that we're hoping that it will see it will be available for us to apply for approval soon. Just on the ICS, the Inclusive Carbon Standard takes the approach where the methodologies that you write, and unfortunately I don't have time to go into the detail for the people who don't know carbon, but the people who do will understand what I'm talking about. The methodologies becomes code on a platform, and it acts as a smart contract. So when you log on, you choose methodologies to do your carbon. The methodologies auto-generates the templates for documents called the project description or project design document, PD or PDD. That takes a huge burden of the project developer. But because it's now automated documents, your probability of error is significantly reduced, and that also reduces the auditing burden. And combined, that reduces both the time and the cost. Then on top of that, we've got a facility where, because the system, the documents now live on the system, you can actually connect Internet of Things or IoT devices to the system, and your monitor data can be fed directly into the platform. And because that happens, again, you don't have to manual calculations, you don't have to write the monitoring reports manually, it's auto-generated by the system. And therefore, again, your auditing burden is significantly reduced. So the net outcome of it is that both the time and money that the project owner or project developer has to spend is significantly reduced, and the auditing burden is significantly reduced. And we believe that that will achieve this goal of reducing the life cycle cost of issuing carbon by at least a factor 10 without the time of development. And with that, we believe that we can open the door for SMME, community-based rural projects to come to the market in a way that can guarantee the environmental integrity of the credits to a level that's even higher than what you currently see in the VCS and gold standard, and possibly even the developing Article 6.4 mechanism. So yeah, that's a very, very brief summary, and I'll be happy to discuss further.
Thanks very much. Yeah, congratulations. I know a lot of time and energy has been spent on developing this, and it really sounds very promising for all of these smaller projects in South Africa. So that was a discussion on the supply points. Storm, I'd like to get back to you on the demand side. What else can we do on the demand side?
Great, thanks. So, I think we're moving the conversation into the realm of, needing high quality offsets, and this is something that all of us agree needs to happen. We need to make sure that these offsets are real, verifiable, permanent emission reductions, because it is the fundamental foundation of what holds up the carbon offset market, and really will make this market flourish as a mechanism for flexible reduction. But what we're seeing now is that, there's a multitude of standards that are now dictating the rules for how and when we need to use offsets. We've got an alphabet soup emerging of SBTI, VCMI, ICVCMS, ISO, and so on. So it can really cause some confusion in your brain if you're trying to find, where all of these things need to slot. And this is great on one hand, because it's starting to really formalize the legitimacy of offsets within certain guardrails. But on the other hand, the criteria that are being put forward are generally impractical, and they're really not tailored for the context in which we operate, especially the context of a developing economy. So, for example, the criteria where, you need to achieve annual linear reductions by a certain percentage, and only use offsets to go over and above that ambition. It removes any and all flexibility to be able to implement large stepwise reductions that need intensive capital and engineering time to execute. So unfortunately, we're creating a situation where we are letting perfection be the enemy of progress here. And it's slowing demand at a very critical time where we need this momentum to scale in the future. So I think for me, one of the main things and one of the things that we need to look at is developing context-specific standards and criteria that we are able to still maintain the integrity and the quality, but that's also going to help us unlock the demand that we need.
Thanks very much. Robbie, I'll bring you back in at some point just to talk about that point around SBTI and credits. But first, I'd like to bring you in, Murian. I'd like to have your thoughts, from what you've heard so far on the regulation, on the supply constraints, on the demand issues. What are your thoughts on all of this?
Yeah, thank you, Antoine, and thanks, everyone. Good to be here, albeit virtually today. Look, I think what's really standing out is we have a couple of themes coming full circle across this entire conversation, right? So, we spoke about the need for quality and more standardized frameworks, the alphabet soup that you just mentioned, Storm. What we're really getting at there is the power of rules, right? Of having a clear set of guidance, of having a price on carbon, as Rodrigo mentioned at the start of this. And this is where that interplay between the importance of voluntary schemes that can increase ambition, but the power of things like the domestic tax and the pricing regime that has been created in South Africa really gets put into the spotlight. And there's such a powerful platform here domestically because you have that experience and you have that piece of regulation in place. I think a lot of South African corporates like Sasol and others have experienced that firsthand of even just having a set of rules around a piece of the abatement puzzle that can be solved, for example, with offsets, actually unlocks ability. So it's about increasingly finding that balance between flexible approaches, but giving enough regulatory guidance that there is certainty and you can remove these concerns and candidly sometimes the excuses around, we're nervous to participate or we're nervous to take more action because we don't understand the rules. We think we might get criticized for it. And then, if you look at South Africa again in that specific context, there's this really powerful ability to continue designing those rules in a way that's fit for purpose, right? And I think we've seen, in particular across the African continent over the past year or two, there's been an explosion of interest and potential in these markets. And a lot of that has been from the supply side. So you've seen the rise of things like the Africa Carbon Markets Initiative, which, Vertree and Hartree, we've had the pleasure of helping to support and drive over the past year. You've had, as referenced before, the design of various Article 6 frameworks, Zambia, Ghana, Kenya leading the way. But one thing that's become really apparent is, again, no one size fits all. And Robbie, as you were saying, different countries are designing their Article 6 frameworks with different rules in mind. South Africa, again, has shown that there's real understanding of how these market mechanisms can work and understanding of the local context, and that, the international standards and the costs and the barriers associated with them are just not always fit for purpose in the local market. So by creating options like the inclusive carbon standard, by really leading the way on your own Article 6 framework, there's a huge leadership opportunity here that can then get scaled up across the continent and regionally, and only increase ambition, but also increase the opportunities for as a country or a corporate in that country to participate in these markets at more scale. So I think those are the two themes that are really standing out at the moment. And they're equally applicable across both the supply and the demand side. When you think about, again, as Storm, you were just saying, the alphabet soup, what works, what doesn't, and how can market participants take the lead on really educating and driving initiatives that will be more fit for purpose. And Robbie, I know you have some thoughts there on SBT, and we can get into that a little bit further, but also happy to share on some experiences I've seen firsthand with clients on how they set these targets and navigate those roadmaps when the rubber comes to hit the road.
Thanks very much, Murian. So, yeah, great to have regulation as it provides certainty and clarity, but also it's good to design it well so that it doesn't stifle innovation, and productivity on the ground. Find balance to find there. So yeah, just building on the point that you mentioned, Storm, about SBTI, and just does it really work in the local context, especially in South Africa? Robbie, I believe you're doing work on this in the South African context with a method proposal. Could you please share a few thoughts on this?
Yeah, thanks. It's been a couple of years since we worked on a SBTI method. And maybe just a quick recap on that, because I wasn't thinking about talking about it, but I think it's very relevant. is way back after the COP in 2015 when the SBTI was launched. There wasn't a lot of methods. We then approached them and said we would like to develop a method that takes into consideration common but differentiated responsibilities, as well as primary industries, because the methods that were there were mostly born in the global north. And they said, yes, they'll do it. It was a very difficult nut to crack, so we spent about 2 years working on it. And after 2 years, we were met with a blanket refusal to even consider what we've done, because the answer was that on a conceptual level, they're not prepared to look at the differentiation of targets based on the location of the project or the business. So that was very disappointing. At the moment, we're finding a lot of problems. We have assisted a lot of very, very large emitters to on their decarbonization targets, their decarbonization trajectories, and some of them have applied for SBTI targets. In the last week, one of them was refused validation by the SBTI. And there are some very practical issues. For me, the most fundamental starts with carbon footprinting. The Greenhouse Gas Protocol was first published in the late 1990s. The current version dates back to about 2002. The SBTI still insists on using the Greenhouse Gas Protocol. The ISO standard, ISO 14064, was updated in 2018. It was adopted in South Africa in 2022. And the ISO standard's got a fundamentally different approach to setting the boundaries of indirect emissions than what the Greenhouse Gas Protocol has got. And the SBTI bluntly refuses to accept the way, the moving forward of the principles of carbon footprinting, specifically related to indirect emissions, as embodied in the latest ISO standard. And that's very sad, because the practical implication of that is that companies with very large value chain emissions find it absolutely impossible to meet the SBTI requirements. And that's where Storm's comment becomes very valid. The perfect is the enemy of the good in this case, and it is doing a lot of damage. And that's very, 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 very sad. We think it's possible to solve that problem, to overcome it. The ISO organization published in the last week the ISO standard for towards net zero or carbon neutrality. It is ISO 14068. And we are actually recommending all of our clients with large indirect emission inventory, scope 3 emissions, large value chain emissions, to seriously consider not doing the SBTI, but using the ISO standard. There are some fundamental differences. The first is that if you use the ISO standard, you can have your standard valid or your target validated by any ISO accredited auditor. The SBTI doesn't recognize it. They insist on internal validation, which I do think is a conflict of interest. But the biggest challenge we've got is the CDP will not score a target that's been validated by anybody other than the SBTI full score. So we had a call with the CDP, and I asked them, how can you judge a single organization with a potential conflict of interest because they validate the standard that they've drafted themselves? How can you score that higher than a ISO accredited auditor and ISO standard? And they were not able to give me a straight answer. So I think it's sad that this is happening, because it's putting a damper on the ambition of companies that, due to the fundamental nature and structure of their business, cannot comply with the SBTI requirements. And it's really a case of the perfect being the enemy of the good. Again, about this, I can speak for 3 weeks. I think I should stop there.
Thanks very much, Robbie. That's really interesting. I believe it came out the day I arrived here, so I definitely haven't had time to look at this ISO document. I know it was a really long process, but it's really good that it's an alternative. And Robbie, I'm sure you haven't, I don't know if you've had time to look at this document, but for instance, it talks about a claim that seems to be abandoned by a lot of corporate buyers, so that's really on the voluntary side, which is carbon neutral. So wondered if you have any comments on that, on whether Sorry. My bad. Yeah, if you have any views on that, if it feels like it's become just too dangerous at this point for corporates, and then also, no, please, sorry, go ahead with that one first.
No, that's great, and just the word certainty was used a few times, and look, as a commodity trading house, we're in the business of managing risk, be that delivery, volume, or price risk, and I think all the discussions around methodology really touch into delivery risk. So when we go out to look for opportunity to invest, and bear in mind that those investments are done with a 10 to 20 years horizon, we do need that certainty. We do need that assurance, be that from a government policy level, in terms of price and in terms of methodological framework that we are working on, that those investments will endure and we will see the results of that. So from my standpoint, I cannot emphasize more the need for that certainty. And to your point, with the soup of letters you have out there today, having that certainty and thinking about what are the standards and what are the methods that will deliver the credits of the future, it becomes incredibly challenging. I take very much to heart the comment that you made around developing methods that are appropriate to the local context. I mean, historically, all those methods have been developed in Bonn, in DC, or in Geneva. And I really applaud the initiative of trying to develop standards that are appropriate, that are locally appropriate, but also deliver integrity. GHG, the integrity of the emission reductions that you can claim is fundamental and underpins everything that we do. But those needs to be appropriate to the conditions where they are applied. I've used ISO a lot in my previous job or in my life in the past 10 years, and I was always comfortable with carbon neutral claims because it was never something done in a vacuum. It was done in the context of a standard that is independent, that has been peer reviewed, and is approved. I think things changed a lot in the past 3 years. I think it's time that we as an industry coalesce around a set of definitions that everyone can and will feel comfortable about. But just one point, and that's based on the experience we had in Australia. Sometimes you do need a national champion to go and support and make sure that you create a safe environment for the private sector to operate. And for many years, the Energy Department in Australia run their own carbon neutrality scheme, voluntary, but that created that environment that companies said, well, I can still use that claim if I follow those steps, if I meet the requirements of the law, and that's a safe space for me to operate in the voluntary carbon market, and I know I'm not going to be sued for that. So I think while everyone's putting our hopes on those voluntary standards that are coming out there, I think there is still a role for governments also to provide a safe environment that corporates can go and make their claims, provided they meet the specific steps. So.
Thanks very much for your thoughts on this. Looking at the time, I believe we have time for before we do Q&A, time for a final question to all of you on the panel. So from your different perspectives, if you could wave your magic wand right now, and please do respond in just a short answer, a few seconds. What is the one key item that, if unlocked now, would put us on the path to a flourishing market in South Africa? Let's start with you, Storm.
So yeah, my magic wand would yield policy certainty. The idea that offsets will persist. That we understand what the allowance will be under the carbon tax and how it will persist into the future. This will give us the certainty to start looking at how we can be more proactive in investing in these types of projects, which will ultimately lead to a massive scaling of them. And there we can then serve the local market. And once we have surplus, we can export the local market. Thank you.
It's hard to beat that one. I would copy that, and I would just maybe emphasize what has been said around having a set of methodologies that really unlock supply in South Africa that are appropriate, regionally relevant, and are align with countries' priorities that deliver the benefit where the country needs the most. So that's it.
Thank you, Murian.
Echoing that, I'm going to be a little controversial and maybe punchier and say on top of that policy certainty, I think the one thing that would really unlock is actually a slightly higher price for the South Africa tax that brings more in line with various global pricing regimes and would allow that reference point potentially to be somewhat higher. And I think that would really unlock a greater scale of investment and therefore supply and demand potential as a knock-on effect.
Robbie?
So Storm spoke about the demand side. I'll speak about the supply side, and I'll be very practical and ask something very easy. Because as a child, I learned if you wish for very small presents, you get them. If you wish for large ones, you don't. So the one thing that I would really like to see very soon is the publication of the framework for the approval of domestic standards. We, on the ICS side, we're not the only local standard that's in development. We think that the market will decide which standards to use and which not. But we do believe that if the ICS can have the opportunity to present itself to the market as a South African approved standard, that we can significantly reduce the burden to enter into the carbon market, and we can make carbon finance available to a sector of the South African economy where it will be it will make a life-changing change, and that sector of the South African economy is to date been excluded from the carbon markets. It can really have such a high socioeconomic impact to have carbon finance flow into, I'd like to call it the neglected sector with respect to carbon of the South African economy. So yeah, my magic wand is just to have the framework for the approval of a domestic standard published by the government.
Let's hope for the best. Thanks very much for your quick responses. I believe, correct me if I'm wrong, but we have about 5 to 10 minutes for audience questions. So I don't know if there's a mic somewhere in the room, but please, I see a question in the back there.
Well, thank you very much. I'm Mosama Buza from South Africa. I had wondered from the international panel members if there is a case study where the mechanism for that we are discussing have worked successfully while energy security was not compromised for the country. Thank you.
Who wants to take that? I think Robbie wants to jump in.
Yeah, I can maybe not directly answer the question because there isn't such a case study that I'm aware of. But I think what we need to do is we need to create our own case study, and I think that the work that is done in the just energy transition space in South Africa is incredible. And I think that what we haven't done to date, building on this magnificent piece of work, is we have not considered the potential impact of project-level carbon finance in a big scale on this. We've got challenges in the energy transition in South Africa, the linkages between the energy transition and the carbon market at the moment, in the sense that standards like the VCS have categorically excluded the bulk of renewable energy projects from being able to earn carbon credits. We've had discussions with them. We said to them that what you should do is you should consider project level additionality, because your assumption that globally no renewable energy project that fits into the grid is additional, that assumption is not true in South Africa. So if we talk about energy security, if we talk about the just transition, then a very underexplored, underdeveloped theme in this major stream of work is the role that project level carbon finance can play. And if we can unlock this, then I think we can make a huge difference in the space with respect to energy security and decarbonization. Carbon finance can play a very important role. I did an exercise about 2-3 months ago where I took the grid intensity of the global grids, like the Southern African Power Pool, West Africa Power Pool, Australian grid, European grid, different grids in North America. And I plotted the decarbonization of those grids. And the rate of decarbonization of the electricity grids globally falls so far short from what we need for a 1.5 degree target. And yet, within the context that the data suggests that the global grids are not decarbonizing, the major standards all saying, sorry, you're not additional. That doesn't make sense. So, yes, to answer your question, I think we need to create our own case study. South Africa is the case study for the world with respect to carbon tax and offsets. It works very, very well. Other countries are starting to copy us, more and more will over time. And we can become the case study for the world on a just energy transition as well. And carbon finance can play a major role in that.
If I can just jump in on that and fully support everything you said, Robbie, just there and echo, I think South Africa is that perfect example of where, coming back to that theme of not one size fits all and the leadership opportunity, this is exactly it. It's almost a no-brainer opportunity set to use carbon markets as a mechanism to create local standards and methodologies that would be eligible under the tax or recognized by friendly trade counterparties to finance, a secure energy transition and really work on improving the power situation in the country that I know has become, a really critical issue in South Africa over the past few years. There's a lot of, even up to the levels of institutional capital that wants to get deployed into energy transition, into improving things like the grid in South Africa. And it's just not getting matched because we're not using these market mechanisms to their full potential. The last thing I'd say there as well is, especially for some of the government and public sector audience in the room or on this panel, this is also where the opportunities around Article 6 and the operationalization of that component of the Paris Agreement could be really powerful. Because if South Africa were to sort of leverage, say, Article 6.2, and through diplomatic negotiations enter a bilateral agreement with another government that shares the same vision, that wants to finance energy transition, that wants to support, improving the grid and the renewable infrastructure in South Africa, you could have a direct, bilateral trading opportunity there and financing mechanism. And I think this is something that, collectively we should all be looking at a lot more closer and trying to untap that potential.
I'll have one quick line on this. So the existing regulations already make provision for this because renewable projects under 15 megawatts are eligible for carbon offsets. So we already actually have a platform to be able to launch these small-scale renewable projects using carbon offsets. So there's a real opportunity for these kind of smaller installations already. Thanks.
Thank you. I hope that answers your question. I see a question here, and there were 2 questions in the back. Yes. Please go ahead.
Okay, sorry, I'll keep it quick. Just to pick up on, thank you so much for the really interesting panel. Just on the supply side, we're a carbon project developer in South Africa trying to get these projects to market, and I just want to emphasize how difficult it is to do this. So I've got 2 quick questions on that. The first is that, do you see a price increase for projects that benefit conservation? So one of the dangers of the natural climate solution space is that we're going to plant trees and grasslands that are going to undermine biodiversity, for example, whereas soil carbon projects will be more applicable in many of our systems. But that is not reflected necessarily in the price that we are getting for those premium credits that intersect with biodiversity, communities, et cetera, et cetera. So that's the one question on the methodologies. And is there scope for the inclusive carbon standard to integrate those kind of more locally applicable type project methodologies? And then secondly, as you know, to get projects to market, especially if they're removals projects where we're sequestering new carbon, it often requires upfront capital to launch the project intervention, to do the training, to set up the infrastructure. And we are really struggling to get that because there's a risk associated with it. So from a buyer's perspective, what is the appetite to sort of set up a mechanism like special purpose vehicles where you get that upfront capital and then that capital is at risk slightly, but you would be paid back from the carbon revenue ultimately. Thanks.
Let's get those two. Maybe there's another one there.
Thank you. Thank you for the very informative session. I'm Santos Sukram, technical advisor at the South African Wind Energy Association. Just one quick question. The gap between demand and supply, that 6.5 million tons demand versus 2.5 million tons supply, how long, in your opinion, do you see that gap taken to be resolved, considering that there's a multitude of surveys and reports that have come out? I mean, the Renewable Energy Grid Survey, Eskom's own GCCA assessment that says, renewables is going to accelerate gigawatts per year to the order of 60 gigawatts in 5 years. So is that achievable, and how long do we take to close that gap for those carbon credits? Thank you.
Should we start with these two? All right.
Maybe I'll just give two quick comments. So we are already starting to see that gap close slightly. It is happening more from the agricultural types of projects, as has been mentioned here. So slowly we are seeing the gap close, but it's definitely not happening fast enough. From our perspective, one of the things, and I think to answer the question about the willingness to, fund projects up front, that's where my comment and my magic wand came in, around the regulatory certainty. If we have a certainty that under the carbon tax that there will be eligibility going forward to 2030 and above, that then helps us, that creates the incentive for us to potentially enter into discussions around pre-funding or buying credits up front to help fund. So for us, unlocking that regulation will then help provide the certainty, and then we can start entering into conversations around being more proactive in the space. Thanks.
And very quickly, I appreciate we are short in time, but just to your point, and we can, it probably deserves a longer conversation, which we can have after this, but just very quickly, the easiest way you can have inclusion and these other project activities, which cost more, fundamentally cost more, is to have a higher price. Now, there are a number of ways that you can achieve that. You can achieve that by increasing the tax level. You can achieve that by having access and linkage to international markets that pay more, or trying to find a way to capture the additional incentives and benefits that you have through an additional certification or an additional standard. So the higher the price, the obviously greater is the opportunity for you to include activities that otherwise wouldn't be viable. And I totally, particularly in an environment where capital costs so much, now, I think for removals, that's a special challenge.
We've run out of time. I know there was another question, but maybe let's take that one after the event with the two of you. But please join me in thanking the panel, and thanks very much again for being here with us. Thank you.